Hey, good morning. Let's go over today's trade plan. So in the overnight session, we were watching whether ES could hold above 1992, which it did, and at this point, buyers are still in control. Heading into the open, we have pre-market support 95 to 96, and we're going to be using 91 to 93 as the micro bull bear zone to establish our short-term directional bias. Now, ideally, if the market is really strong, it actually holds 95 to 96, and even a break below that zone would be a sign of short-term weakness. And at that point, depending on how the market is shaping up in real time, it could actually be setting up for a break below 91 to 93. But from a price action perspective, 91 to 93 is really the key spot where buyers need to defend. It's just that that zone has held on multiple tests, and another approach of that zone on some decent momentum could end up breaking it. And that's why, ideally 95 to 96 actually holds if buyers are going to maintain control. On the upside, we have pre-market resistance 99 to 2001, testing that key 2000 level. It was tested yesterday. We found some sellers, got a pullback. At this point, it would be, another approach. And, the more times you test a zone, the more likely it is that it's going to give way. So on the upside, even though we have that pre-market resistance, the idea is that if ES continues to hold above 95 to 96, that pre-market resistance can give way to some higher prices, and we can get a continuation move to the upside. So, the way that the market is set up right now, it's very important to watch momentum because we want to see that continued momentum on the upside if this move is really going to continue, and the market is going to make a move higher and test some higher prices. So it does require a certain level of flexibility. It does require you to be quite nimble. Where if intraday the momentum shifts, kind of like what we saw yesterday, where in the morning there was still that buyer strength, but then when we got up to that 99.5 resistance, we started getting some selling and ended up reversing that intraday move. So that's kind of the market we're in right now, where we're trading at all-time highs, and it's just a question of is it going to continue? Is it going to put in a short-term correction? Bigger picture, we know that buyers are in control, but short-term, on the day time frame, the momentum can go back and forth, and that's why it does require that flexibility. Or if you want to be conservative, then you're going to have a stretch where you're just not going to have trades, right? Where if you're not willing to take the aggressive long, and you're waiting for the ideal location, you may not get it. And then once the momentum shifts to the downside, if you're not willing to be aggressive and kind of just take it on that momentum move, then you're going to have to sit out on that move too. That's the type of market that we're trading right now. Volatility has gone down a bit. The ranges are not really that wide. So, there are two ways to deal with it. One is, be aggressive and take it, but then, manage the trade a bit more closely. Or, just don't be active and just wait for the ideal spot, wait for the perfect setup. And if it doesn't happen, then it doesn't happen, right? Then you just kind of sit out for a few days because eventually, the market will get volatile. Volatility is cyclical, and it's not that it's going to stay this way and continue balancing in these narrow ranges. Eventually, we're going to get a break one way or the other, and then we'll get a little bit of a pickup in volatility, and you'll get some better trade setups. But right now, that's kind of the context that we're trading in. So you just have to kind of pick, which side you want to be on, or just how aggressive you want to be, and then just stick with it. The important thing is to be consistent with your execution and with how you want to trade. So 95 to 96, important short-term area. Holding above it just tells us that buyers are still in control and in firm control. 91 to 93 is the last spot that buyers can defend. In the event of a break below 91 to 93, we can get a pullback to 84 to 86 and that 87.75 gap, and potentially even a bit lower. That's something that we will have to gauge in real time, depending on just how the momentum is shaping up, whether it's a really high volume move or a low volume move. If the volume's light, then 84 to 86 could cap the downside. If the volume's running high and momentum is high, then we may have to push down to 79.5 to 81.5 in order to track buyers on a break below that micro bull bear zone. On the upside, break above 99 to 01 would mark a fresh all-time high, and there is no resistance. There's no hard resistance at those levels, right? The market's making fresh all-time highs, so there is no resistance, and you're going to have to gauge, your exits if you're long, based on just volatility, momentum, the range on the day. If the range is a bit exhausted, let's say at 8 to 10 points, probably a good idea to get out rather than just hold on, because there could be some profit taking in rotation. So that's something that again will have to be gauged in real time. On the econ calendar, we have consumer confidence at 9 a.m. Central. That's really the only potential catalyst this morning. So in the first 30 minutes, the buy side is still in control, and I'm expecting that side to still be a bit more dominant. And then after consumer confidence, I think we'll have a better picture on how this day could shape up. So those are the main thoughts heading into the open. Let's see how well the buy side holds it up this morning, and we'll take it from there.